The economy is weak. I repeat, the economy is weak. Can we take a moment and understand the difference between the economy and the stock market? These are two very different things. The economy is about people working, building things, roads and other infrastructure being repaired. In the case of the stock market, we have watched the synthetic abnormal events occurring in order to get the currencies to be devalued enough to ensure that the markets remain at a certain level and not allowed to fall any further. Any problems, no worries, just start the printing presses, right? You came here for the truth, so let me unveil that for you. Today we are going to look at what is happening in between China and the US. I want to talk about the financial markets. I want to look at the economy. I want to tell you what is going on in the grassroots that is so important, and all of that wrapped up into this video. Let's get into it right away. Here we can see the S&P 500, and this does not include Thursday's trading session, but the reason I show you this right now is simply because we had seen the market trading within this range basically all throughout August into September, and it was funny because this was 5 times in a row where it hit the top and that was a resistance and it fell down further. In this case here, it actually hit 6 times, if you could believe it or not, 6 times within this range. Then we see this information here. China and the US agreed to meet in October for trade negotiations, Chinese Ministry of Commerce. This, of course, makes the markets very happy. They react positively to this, even though we have seen over the last year, actually more than a year now, back and forth, back and forth. We get the positive headlines come in now, we get the tweets coming out, they send things higher and higher. And then we get some real data, some real information that comes out, the markets go down further. Then we get another headline, then we get another tweet. All of this information comes out and it does nothing to actually fix the underlying issues that we have. Why can't they just sit down and negotiate? Why can't they create some sort of deal in that which they agree with, no question about it, get something on paper so that the two sides can say, at least we have this. This is what we have. It's a foundational principle between the pact, not necessarily a trade agreement. Let's just agree to this and that, okay? Then work from there. But no, that's not what this is about. It doesn't have anything to do with agricultural purchases of United States products, of soybeans and everything going back to China. No. This is about the hegemony. This is about creating something that can't be put down on paper. I don't think a lot of people realize that. Now, looking at the financial markets, you tend to see the yield curve inversion as being very, very hot in the news, though it is always discounted. This happens to be the 3-month, 10-year, and you can see what has happened. It has basically fallen off a cliff after the inversion. It shows you really what's going on, because the bond market is not going to tell a lie like Jim Cramer might, like somebody in the government or the mainstream media might, right? We're not getting that information when you simply look at the data itself. If you want to be knowledgeable, then of course you have to look into it. That doesn't mean looking at CNBC articles to get all your information. You need to look at the actual data, and you got to know your history. You put those two things together and you're going to be able to figure out what's actually going on. I want you to focus on 2 lines right here. The light green line is the S&P 500, and this has actually fallen further and further away from the global money supply in August, basically throughout this period. We have watched this disparity occurring right now, but we've also seen it happen in the past. It's not the first time this has ever happened, but usually these move in lockstep. The global money supply, if you're looking specifically at the central bank balance sheets, my goodness, these are correlated. But even when you look at the money supply in general, you're gonna see this type of activity where one moves up, so does the other. And these two right here have been moving in lockstep since they started to engage in the quantitative easing in this cycle. Then there had been some times when we have watched these fall away from each other. That happened to be the 4th quarter of 2018, but that really changed as we got into 2019. Clearly eventually these two move together again. I think this is one of the most important indicators that you can find at any given time. If you want to see a video I have specifically about the stock market telling you which direction it's going to go, it references this chart here. I had posted it a while ago and I wanted to make my point clear and concise. It is a 60-second video. If you actually go to a search engine and you type in the money GPS 60 seconds, you will see it for yourself. We just had an interest rate cut from the Federal Reserve in July. If you look all around the world, you have seen constant and never-ending rate cuts, okay? This is coming from emerging markets. It's coming from basically everywhere. Take a look at the implied Fed funds rate at the end of 2020. The market wants more. It wants, in fact, 125 basis points more. That's what we're looking at right here. They want this to be as close to zero as possible. They want it into the negative. Look at Alan Greenspan said that you can expect negative rates in the United States. And of course, it's not a bad thing. The United States can do anything and everything, and we can print as much money as we want and so on. No repercussions. Everything is good. My goodness, the way that they talk is truly unbelievable. Regardless, what you're seeing here with the Federal Reserve is no different than with all other central banks. All of them want to do the same thing. They want to devalue their currency and of course be able to control what happens in all financial markets. This is just one example. The Federal Reserve, speaking of the Fed, here is the beige book, something I show you on a regular basis. This just is really just summarizing the overall status of the economy and the markets as a whole. I wanted to give you just this first line because it is a summary of what they believe. On balance, reports from the Federal Reserve districts suggested that the economy expanded at a modest pace through the end of August. Now, if you go back 1 month and look at the beige book, they said the exact same thing, and then they cut rates. So are we expecting another rate cut? They said this basically exact same thing, and yet we had a rate cut. Why? Because they were worried about the tensions. They were worried about China and the US. Well, now we're seeing that they're going to meet up in October and everything's going to be good. They're going to have a trade deal and everything's going to be fixed. On top of that, we have the expansion at a modest pace. So are we going to see rate cuts in September? Well, let's see what comes of this. So there's a few things on here. We're looking at the PMIs, whether we are seeing headline and new orders close to 2012 lows in the top left corner. Then we see the 71% of manufacturing PMIs are below 50. That is a contraction. Then we have employment subindex has moved further into contraction. And the US ISM new orders have slipped below the rest of the world. All four of these show you the economy is contracting. It is slipping. And we need to understand the difference between the 7 share of Amazon type investor and what they are concerned about and the actual economic indicators. That's what we're covering here. South Korean export growth and global earnings per share growth. Of course, this right here happens to be correlated. South Korea is seen as a bellwether. We've talked about this many times before. Bank of America's global earnings per share model and global earnings per share growth. Of course, both of these look very bad right now at this time in the negative. We've seen this happen a couple times before in the cycle, not the first time, but of course it shows you that the weakness is there in all different aspects all around the world. S&P 500 earnings per share estimates in 2019. Look at what has happened. This has been declining throughout this period, even though we've been told 2019 has been fantastic. Look how well the market's doing. Let's ignore what is going on over the last year and a half. Let's ignore the fourth quarter of 2018. Let's just take it from January 1st, year to date only. Those charts look fantastic as long as we ignore reality. Freight shipment slowdown. Of course, this is the Cass Freight Index, and this has been going down now for a little while after coming up throughout 2017. It did very, very well. And then we saw the general economy going downwards throughout 2018. Is it such a coincidence that when they started to contract the monetary supply, that everything slowed down? The stock market slowed down, the economy slowed down. Everything is getting weaker. and that happens to be around the same time, let's call it 2018, maybe, in fact, just maybe, that was the top. Copper is an industrial metal. When you look at what it has done over the last while, I mean, it's clear that there is weakness here in this particular commodity. If I branch off further, I see the same thing with other commodities, but they call it Dr. Copper for a reason. People are looking at this, and right now it's showing weakness, okay? Yes, we can take it back further and see the growth throughout this bull market. There's no doubt about it, but there's only so much stockpiling you can do. That's not a good thing. We will see countries like Chile that are affected by this because that is a major export of theirs. So watch as all of this right now starts to intersect and interact with each other. Very important to see each and every piece. On the other hand, we have a precious metal, gold. This has been going higher and higher. Now, nobody really wants to invest in gold, and I'm talking about all the hedge funds and all these fund companies out there. They hate gold. I'm telling you right now, all of these companies, all of these so-called investors, they hate gold. But when you see it going up, they're buying into paper gold. That shows you they've run out of all other options, okay? They will invest in goldfish before they invest in gold. But here you can see it as it goes higher and higher. It was trading within a range for the longest time, and now this has continued to go to the next level. It hasn't been at these levels here for years, and this just shows you the weakness and the risk. The fragility that is in this system is quite apparent. Monthly Global Economic Policy Uncertainty Index. This just shows you something. I've given you the breakdown before very quickly. The index quantifies newspaper coverage of policy-related economic uncertainty, reflects the number of federal tax code provisions set to expire in the future years, and uses disagreement among economic forecasters as a proxy for uncertainty. This has climbed to levels we have never seen before. Okay, so I just wanted to show you that it is just one indicator of many. I like when they do this and they actually put together all this data to create their own index instead of just looking at the S&P 500, for instance. This is really telling because it's one of those second and third level indicators that I like to see. Then we get to the real deal, all right? I did a post about this in my community or blog section of my channel, and I wanted to show it to you right now. The data comes directly from the BLS. We've been hearing all of the time about how fantastic the jobs numbers are. The unemployment rate is at 3.7%. The unemployment rate is at 3.6. It's at 2. It's at 1. Soon it's going to be negative 5%. Why not? I mean, why not? Really, it's ridiculous, but hey, people will believe it. This right here shows you the fastest growing occupations 2018 and projected 2028. I wanted to give you an idea, a closer look at what's happening with the jobs situation. This would tell you how strong the economy is. If wages were increasing, which they're not, if they were increasing, that's a good sign. If we see that people are actually able to afford their lifestyles, even if they're very modest, then that would be a good sign. They're not able to. Then you look at this here. Well, if you want to break it down and just see some of the different jobs that are out there that are very popular and then see what they get paid. This happens to be one of the fastest growing occupations right now in the United States, personal care aides. And just look at the numbers. Employment right here, it is the highest on this list and it looks to be getting much higher as of 2028, and that of course is because of the aging population. Median annual wage in 2018 is $24,000. $24,000, as far as I am concerned, is unaffordable. Your life, for the most part, cannot be sustained on $24,000. Just above that, another one that is quite popular, home health aides, $24,000. This is what people are making right here in these professions on average, of course. That shows you you're not going to get started at that wage. It's going to take some years. Depends on what city you're in. Of course, there's a lot to this, but ultimately it just shows you these jobs that are coming up, you're finding people are getting salaries that they can't actually live with. So what do? They got to take a second job. They got to take a third job. They got to sleep in their car. They got to live in their RV. They have to do things which I would consider to be extraordinary, that's not a good sign. That's not a strong economy. I've heard the comments before so many times, in fact, well, they'll say, well, so what? Just take a second job. But that's not how it's supposed to be. 50 years ago, you didn't have this problem. You had people that would work one job and that would be sufficient for the entire family. Now, what has changed? Sure, we have iPhones today. We have wonderful kitten videos on the internet. I get it. But if you look at it, this is unbelievable. We've gone into the complete opposite end of the spectrum. Not only do we have to have two people working in the household, but those two jobs, in many cases, are not enough to support the average lifestyle. Something is fishy right here. Now, if you go through the list, you're going to see some other jobs that do pay a lot and they are great. Okay, so if you're looking at software developers, for instance, this is something that people get into. Perhaps if they get a job, they are making good money. I understand that. But when you look at the bulk of jobs that are being created today, we're talking about temp jobs, we're talking about low paying jobs that happens to be the most consistent in what I have seen. And then really quickly, before I end the video, this is also from the BLS. This is the document that they show here. Of the 30 fastest growing occupations, 18 are in healthcare and related occupations. It just mentions the aging population and how, of course, this is going to expand. So there will be more availability for jobs in these type of things that ultimately do not pay very well. And then if you look at manufacturing, clearly that's leaving. Clearly that's going away. More people will be taking lower salary jobs. That's the way that the trend is going right now. If you found this video informative, hit that like button. I really do appreciate it. If you want to make money, if you want to know how to build a business, I have a step-by-step free e-course for everybody to check out. It is at the AmazonGPS.com. Don't just stand around, actually make it happen. Check it out. There's a link in the description. If you want the financial education you weren't taught in school, I'm talking about the 4 asset classes, the history, the foundation, everything you need to know. Check it out at the link in the description. These 2 books have everything for you. If you want the audiobook, that's available at themoneygps.com. Wait a second, hang on, don't go anywhere. If you haven't watched this video already, I get into this situation on a deeper level in here. Click on it and I will see you there.